Good morning, good evening, good afternoon, traders. Steve here, Logic FX Trading, and welcome to our trading room recording on Tuesday, the 7th of April 2020. Let's just start with our stock markets. As we said the other day, guys, we did have something that looked like it was going to break out, which it has done. If you wanted to get into this, I would have got into it there as it broke out. There is the warning around that this whole thing could turn into a bear market, but I think there's a bit more upside to this before it would go down. We're going to have to wait and see what damage has been done to world economies as we come out of this. And once those bankruptcies and profit warnings start to come out, we will see how the markets respond. But at the moment, they're responding to China announced yesterday or overnight that they've had their first day with no new cases. Spain and Italy have said that Spain has said that 4 days in a row where they have decreased the amount of death from coronavirus. In China, I'm not sure if it's new deaths or new cases, but nonetheless, it's on the improvement. And if you look at this is the graph I've been drawing since start of February, guys. It's the S curve, and we may be kind of entering that sort of point. China may well be on the way down with it, but Spain may be here, Italy may be here. I think the US, the UK are still on the upward track at the moment. But if we happen to follow what the other countries are doing, then eventually you should start to see it tailing off. Then the worry is, do you get another spike in it as the lockdowns start to be released? And even if you don't get the spike, then the next worry we have is, well, what damage has been done? People are going back to work. Are there orders on the books, etc., etc.? And then from there, we'll have to see how the stock markets react. But for the moment, I would say yes, I would see them coming up. Maybe a zigzag. I do not see them doing that, folks. I can see them bouncing around. That's a bit of an exaggeration there. I can see them bouncing around in this sort of way here, guys, for a while, and maybe even putting in lowers, but not immediately. I don't see anything happening immediately that would make that happen. So our forecast from Monday looks like it came out okay, which was a breakout on all of the stock markets. We'll go and have a look at the rest of them now. Just want to clean this up a little bit, folks. Okay, let's have a look at the rest of them. Aussie, slowly but surely making progress. I've put that in. I don't know if it's going to be that or not, guys. It could end up being some sort of more of a flat channel, something like that for a while, until we find out if things are all hunky-dory. Then they'll start to come up. German, our alarm was there. We've obviously broken out of that. And what I've basically said is, if you're not in that, then obviously you've got to wait for the next pullback to get into it, wherever it may happen. French, same thing. Our alarm line was there on Monday. It's broken out. It's coming close to previous highs. We'll have to wait and see if it pushes on up. But if you're not in it, you're going to have to wait for a pullback to get in, or wait for it to break out and get pulled back to get in. The UK, same thing. Our alarm was there. We've had a breakout. You should be long in this if you wanted to trade it. Same thing. If you're not in it, you're going to have to wait for a pullback to get into it long, or wait for a breakout and then a pullback to try and get long. Nasdaq, it's pushed on up, worryingly impulsively from my point of view. But if you zoom back out, you start to see where we are. We've actually already on that that looks like almost a 50% recovery, which is just remarkable. But I suspect that it's overdone. It is a 50% recovery, guys. I wouldn't be jumping in long there. I would wait for a pullback. Maybe we end up in some sort of channel coming up, but I imagine there's some more downside before. I can't just see it. See, like that, guys. I imagine you get something like that before it would go on up. S&P will gap up today when it opens. There was the gap from yesterday. It will gap again. Look for a pullback to get in if you're not in. Dow Jones, same thing. It will gap up today. Look for a pullback if you're not in. Let me just zoom in on that a little bit for you there, guys. What I've looked at here is a possible zigzag. Of course, the zigzag can turn into an impulsive wave up. But for now, I've just done this. We've done it with a fib as well, but the easiest way to do it is just say, well, there's your pullback, there's the move up, there's a possible target for this to get to, and then from there it'll either continue on up as a third wave, or it'll pull back down because that is a zigzag and we'll move back down again. But we don't know. We'll have to wait till we get there first and then see how things go. I don't think that's on the cards yet, guys. I think we'd have to get some figures in from companies saying, hey, our profits are, we're going bankrupt, or we're laying 3,000 people off, or we're, you know, and then you'll start to maybe see the markets come down again, and they could break the bottom. If we're going to be in a bear market, the world is now officially in recession, folks. Whether that, how that pans out is another thing. But we need to be aware of it. That's why I'm pointing out the fact that these could go short again. Okay, DXY. Moving in the direction that I forecasted. What I said on Monday was, where were we on Monday? Monday was the, oh sorry, yes, yesterday. I forgot we're in Tuesday today. Sorry, we were in here Monday. It was last week when we were coming up here. I said, let's just see if this is a zigzag, guys. 5, pull back, another 5, and then we'll get a drop. And it was a bit slow to come down. I was starting to think that it was wrong and it was going to go up, but it started to pull back down. I would say, yet again with this, the simplest method is look for a zigzag. Could come down into that area. Obviously your first target would be there. Most of us probably won't actually trade the index, but we'll take the information out of it and then put it into the major pairs. And if you then go and see, I've moved these all because I've already done my trading room for today, but our alarm was down across there. It's clearly gone off. The pound, a little bit more wary of the pound, guys, because Boris Johnston was put into hospital on Sunday evening, and yesterday they said he was his condition has been worsening and he's now in intensive care. When that news came out, we got that move down, which kind of made me a little bit more wary of calling this long. But if you take that out of the equation, prior to that I had this as a 1, 2, 3, 4, which may pull back with some sort of A, B, C, and then a push up maybe to the 127 extension of that, and then from there we'll work it out again where it's going to go. But if Boris dies, then I could see this dropping again deeper, not necessarily below the bottom there, guys, but certainly deeper, and not such a nice move up as I was expecting with the pound. So that will apply across the board with the pound, guys, if Boris dies. But at the moment they're saying he's in intensive care but stable, so let's hope that he pulls out of this thing. But just be aware of what may happen if he passes away, folks. As far as oil's concerned, we're still in the little corrective structure after we had the news that there was going to be meetings and one thing and another between Russia and OPEC, and then the meetings were cancelled yesterday. So I think the oil price is just waiting to see what's going to happen. But I think they'll sort something out. It's for everyone's good that they sort something out, including their own. So I think ultimately oil will go long, which then will push the CAD long, folks. And the place to look for the CAD to go long, as we've been saying, is against the yen, because it's going short. More bad news out of Japan about the economy. Doesn't look good, folks. They're in recession, so I think this yen will continue to weaken, and the same with the CAD Swiss. That's my other pal. Yeah, we've called this long, and it's starting to creep up. I was a little bit wary around here because it had come into this so many times. I thought we might get a pullback before going, but it's pushed on up. So I'll just say long in this. Obviously you look for a pullback to get into. So that's probably a bit of an exaggeration there, guys, but you understand what I mean. Our trend in that's possibly, might be something like that. So that may be not exaggerated there. If you got a little bit of a pullback into there, then maybe look to trade that long. And then Aussie New Zealand. This is one of my favourites. It's continuing long. I've got a tentative trend line in there, so anytime it pulls back into that, I'll look to trade it long. That's us for today, folks. I'll speak to you all again tomorrow. Bye for now. Stay safe. Happy trading.